Hey, what's up, family? This is Rafael Cortez back on the CEO Pulse podcast, where you get the real, the raw, and the mind of entrepreneurship. I have a treat for you guys today. We are taking it all the way over to the financial side of things. I know we often talk about mindset, we talk about history, we talk about strategies and tactics and everything, but we don't. I don't think we've ever had an episode that it's focused on the financial success. That's and the emphasis of what it takes to get to that financial success, as far as step one, step two, step three, and kind of what to do about it. So with that being said, today we're sitting down with Tracey Bissett, and she is the founder of Bissett Financial Fitness. Also has a podcast on which it's totally geared for young entrepreneurs, and that's Young Money, which is super cool. I think it the awareness of financial health has to be brought more onto the spotlight, and it's one thing that I think it's progressively getting to that point, but doesn't really happen yet. So I'm so happy to have you and your 20 plus years of experience in the financial industry. So welcome to the show, Tracey.
Thank you so much, Rafael. I'm excited to be here.
Yeah, thanks. And so we were talking like right before we started rolling. I mean, you have over 20 years of experience in finances, and we were kind of mentioning the transition, right? You went from a commercial banker, mainly commercial banker working with entrepreneurs, onto having your own consulting and coaching company here. So tell us about how that kind of began and what led you to where you're at right now.
Absolutely. So thanks again. I loved money ever since I was a little kid. So I had little side hustles and little businesses from like the age of 7, because I like to go to the corner store pretty regularly and get some treats. Yeah. So when I realized I liked business, I pursued business education, and I got hired into banking, and I started in commercial lending. So working with business owners of all different sizes, helping them get access to the financing they needed. And I thought I would stay there for 2 years and either go work in one of those companies, or I would go and start my own business. Fast forward 16 years, I've worked with all kinds of different companies. I actually moved into loan adjudication, so approving loans for all these businesses all across Canada, some in the US, across all different industries. And then, as does happen in financial services, there was a restructuring and my seat was taken away from the table. Mm-hmm. I was fortunate to get a fair severance because I'd worked there for 15, 16 years. And so I really took the time to think about what would I like to do. And instead of going back and getting a job in what I was doing exactly, I packaged up all of the things that I like to do. So teaching people about business finances, educating people, bringing up their awareness around money, being able to do some coaching and consulting and advising, packaged it all up together and created Bissett Financial Fitness, which I launched in 2016, and have always been working with young adults or business owners to really bring up their education. It's my belief that financial literacy and financial fitness, as I call it, it's a fundamental life skill. And our school system does a poor job teaching you about personal finance, and there's not really a forum for business education. And so I want to make sure that money and personal or business finances doesn't become a barrier that stands in the way of people reaching their goals.
Wow, I completely agree. I think you hit it right on the head, right? I don't think it's spoken about or taught, enough, especially growing up. I mean, I remember, there's all kinds of classes, and as you go through freshman year, sophomore year, even in college and whatnot. But there's nothing that kind of exposes you to understanding this. We learn historical dates and what happened in this battle and this and that, but what happens when I make $5,000? What do I do with that? Is it a responsibility to learn how to manage money that's coming into it, and how does one get there? I remember I launched my first business and I had no idea. I mean, I just knew. I was looking at the bank account and the balance, and all right, my CPA said we're gonna put together a P&L. I have no idea what that is, but sounds good. Let's do it. So I just kind of rolled, and this was a bad learning experience for me, but I kind of rolled with it for 3 years, right? Just kind of taking without questioning the numbers and the documentation that I was given to me, but by my CPA, and it was all off. I had to come back and redo the taxes. So all those numbers were off. I wasn't keeping track. I didn't know what to do with it. I didn't know what to look for. And I mean, that caused a big problem, especially when you're trying to build something and you're bootstrapping. I mean, there's so many different areas where there's no, I mean, you don't have to be an expert, right? But you have to understand how the numbers work.
Absolutely. And all of the things you just mentioned are what I see with my clients every day. And sometimes there's this fear or apprehension about asking questions because they feel like they're supposed to know. But as we talked about, where would you know? And a lot of people think that your accountant, it's their job to train you and teach you, but that's actually not their role. Their role is to put the statements together and to file your taxes. And that's kind of where their job stops unless you contracted with them to teach you. And so everybody listening, I want you to know you've got to be accountable for the financial position of your business. You don't have to do it alone, though. You certainly can work with professionals to help you who can do your bookkeeping and do your statements, but certainly get a financial education so that you can guide your business where you want it to go.
Yeah, at the end of the day, it's our responsibility. I mean, they may compile the reports and may put it all together, and you may give them, everything that they need to, to do their job right on their end. But at the end of the day, the financial strategy, it's coming down to us as business owners, as entrepreneurs. We know where we're struggling, and inside the business, we know where we can, have some leeway, and that sort of thing. And when you have a decent grip on your numbers, I think that makes it all that much, easier to manage. The first time I got exposed to like the reality of financials in a business was through I took a QuickBooks course, right? So I went to that. It was like a 30-minute crash course on QuickBooks. I was like, all right, cool. I walked out and I was an expert. I understand what a P&L is. I think I learned like 3 definitions: P&L, cash flow, and something else. I can't see, like
balance sheet, probably.
Yeah, balance sheet. So I walked away with that, right? And then I landed it wasn't a grant. It's like a scholarship for entrepreneurs through the Phoenix Chamber of Commerce. It was called Athena PowerLink, right? So they had a finance class in there just for business, and it was called running your business by the numbers. Like, that was the whole name of the class. And that concept just kind of stuck with me. But that was like the first time where I sat down to look at my numbers. That's when I realized that all my accounting for the past 3 years, which I thought was on point, was all off. I was doing everything wrong just because I wasn't taking responsibility for it. So with that being said, how does I mean, what do you tell somebody who's getting started as an entrepreneur, especially, I mean, given that you put a lot of emphasis on the younger generations, which I think it's outstanding.
So I encourage everybody to do a business plan. And when you do that, firstly, you want to validate your product or your service and make sure that people want to buy it. Because we can get really caught up in spending money on a lot of things in our business before we know exactly what it's going to be. Most people tend to go right to make the website. And if you make your website first, I guarantee you're going to make lots and lots of changes because your product or service is going to be iterative. And so do some testing, work with some people, do some beta groups, get some feedback from them. Make sure what you're offering is for the people that you've got it targeted, and that they want to pay the price that you want to charge them. Which brings me kind of to the next thing, is figuring out the price. And so we were talking before we pressed record, 85% of the entrepreneurs that I work with, and these are companies across all different industries, sales are usually peaked out at 2 million. They're pricing unprofitably. So if you start this business and all of a sudden you're working 80, 90 hours a week and you're not making any money, it becomes very unfun fast. And now you can't replace any income that you had, maybe if you had a corporate job or that you were intending to be able to pay all your bills with. It becomes very, very challenging. From there, you want to then, once you've got your product and service really nailed down, you want to do a little bit of forecasting. And as most people know, once you get into it, everything takes longer than you think, and it costs way more than you think. So actually prepare some projections, and it doesn't need to be hard. Think about how many sales you're going to have in each of the months coming up, and at least do kind of a 6-month forecast. And then when you think about it, think about how does the money actually flow into the company. If we're working together, I'm going to charge you up front. I'm going to get my money up front. And then I know I'm going to need to make that stretch to cover my bills over the course of us working together. Other industries, the money flows at different periods. And so you've got to be really aware in your industry, what are the time points where the money's actually going to flow in, so you can manage those inflows and outflows and make sure you have the right amount of money on the day that you need it. And so I typically see business owners don't understand that concept of cash flow, which is different than profit. Sales minus expenses gives you profit, and you can be highly profitable and actually go out of business if nobody pays you. And so you got to keep your eye on the cash at all times.
Wow, I have the perfect example of what not to do on that when I kicked off. My first business was a non-emergency medical transportation business, and I landed contracts with the state, right? And I was super excited because I landed contracts with the state, not knowing what to look for in terms of numbers. Are you getting, are you processing cash or are you processing accounts receivables? I mean, yeah, I don't care, just send it my way. I'll handle it. Well, what happened was that my fulfillment increased, right? So that the need, so I had to hire people, I had to bring in, buy more units, more vehicles. My overhead just, spiked.
Ballooned.
Yeah, exactly. So it spiked, and I had a period of a lot of expenses followed by a period of service that was followed by a period of 45 days until I get the check.
Yeah.
So that's a power of cash flow, right? I dried out because I wasn't thinking through. I grew that company too fast for that one quarter, and it almost put me out of business because I didn't have money to make it until I got paid. I mean, I was literally running on fumes. I had to borrow, do a couple other things just to kind of stay afloat. And yeah, but that's what's so important, right? When you're running a business, understanding how that's going to come in, and how long is it going to take for you to get paid. Something as simple as the is it something cash versus an accounts receivable? If it's accounts receivable, which means that you're getting paid on a delay,
paid later.
Yeah, exactly. How do you manage that? So.
And that's when you know your numbers, then you're actually able to dig into it and start doing some analysis, and even forward looking. How many of my customers do I want to be like governments or corporate entities like you were dealing with? And how many do I want to maybe be individuals? And if I know these people over here are going to pay me in 45 days, I want to increase the number of people who pay me immediately. So maybe you can balance it out. And once you know your numbers, then you can start planning and actually figure that out. And for anybody who's checking us out today, cash flow, really simply, it's money comes in, money goes out, and that timing that it happens is really where the magic is. And if you're not thinking and following the money through in a transaction to understand it, you're always going to be at a loss unless you're working in a business where you get paid up front. But certainly when you're growing, growth is hungry, and a lot of people get super excited with growth, and it is a wonderful thing, but growth is hungry, and the fuel that it eats is cash. So you got to make sure you've got cash reserves around as well when you're growing.
Yeah. And another thing that happened connected to, in cash flow was, I had, that dry period, right? So when we got paid, we got a big chunk of cash. It was a big fat check. And I got super excited. I was like, all right, cool. I am rich, right? But I had all this debt I had to liquidate. I had to pay, the people who I borrowed from. So I got that. And then I still had cash in the account. I was like, all right, cool. Let's do it again. And then I went and bought, I think I bought 2 more units after that. So I was just adding vehicles progressively, right? So I bought 2 more units. I hired 2 more people, and that increased my overhead, a bit, during the month. But now what I was doing, I was spending before budgeting or before allocating any of that to account for the next 45 days that we're going to be. Even my budgeting was off just because the time was off. So yeah, it wasn't that bad the second time around. Like, it wasn't as bad as the first one, but then it hit me like, all right, cool. If I get a big fat check, I got to hold on to it and not spend anything until my budget is good, and I know that I can make it until the next time they pay up.
Yeah. And if you have lots of variability in your cash flow, cash flow forecasting, it's really simple. Even to start out, you can do it on a piece of paper. What's coming in, what's going out, and how you look at it. If your cash flow is pretty strong, monthly is the regular frequency. If your cash flow is tight or challenged, like you were talking about, you might do weekly, and some people will need to actually do it on a daily basis for their business. And so every day of the week, what's coming in, what's going out, what's left, and then you can plot it along either on paper or simple Excel spreadsheet. It doesn't need to be fancy, but it takes all that out of your head, because entrepreneurs do a lot of math in their head.
Yeah.
Or they ignore the numbers, and then usually the story is worse than
A lot of napkins.
what they're imagining is worse than really what it is.
Yeah. What's the, you mentioned something earlier, which caught my attention. And that was, I mean, you start generating, you get, revenue through the door. And then if you don't know how to manage it, you're going to run out. What's your take on strategies, for example, as profit first?
I think it's a great strategy once you're profitable and you know that your business is working. It's very challenging when you're getting started up, when you are struggling to make all the ends meet together to start allocating all these funds to the other bank accounts. But I think it's a good strategy once you get rolling.
And give it some time. It's not something that you would recommend somebody just, kicking off their business with that, type of strategy in place.
I think it's pretty hard because certainly you're not necessarily making profit right at the beginning because you have a lot of expenses at the beginning once you're getting things set up. It certainly depends on the business. The one that you had was very capital intensive where you needed the actual vehicles. So you were spending a lot more than somebody who's going to have like a digital or online business. As well, you want to also think about bank account charges. So if you're setting up all these bank accounts before you actually have the cash flow to go into them, you're going to be incurring service charges, and you don't want to bulk up on those before you actually need the accounts.
Okay, that makes perfect sense. What do you think? I don't know. Give me like a little breakdown or summary of the biggest things that somebody has to watch out for whenever they're setting up their finances and kicking off or bootstrapping a business on a stage one.
So number one, know your numbers. So definitely work with professionals. You don't need to do your own bookkeeping, but you do need to look at the numbers regularly, at least once a month. Super important. Number two, get access to credit before you need it. And I don't care if it's a $5,000 overdraft and you're getting it on your own personal credit score, but it's in the name of your business. Do that as soon as you start your company so that as your company grows, you can grow your credit. Just like we have personally our reputation from a credit standpoint and our credit score, we want to start building up that history and that reputation for our business. So get a credit card, get a small overdraft so that can increase over time. Most people are going to wait till they really need the money and they're going to go in looking for a lot more, and there won't be any track record established for the business. So get on that right away. Another one that I see is a lot of people will commingle their personal and business expenses. So please don't do that. Even if you're running everything through your personal name, get another bank account and keep everything separate. One for your sanity when you're trying to get your numbers together. You're not trying to figure out which is which. Because what can happen is when there's not enough money, you won't know if it's your business not doing well or your lifestyle is a little bit cause for concern. So those are three things definitely would recommend for people to do.
I love it. Perfect. When you say know your and mingling accounts, I did that at the beginning. It's like, I don't need that account yet. No, I'm just gonna take here and then pay myself here and then just take it as an owner's draw. I mean, it was a cluster by the time I got to the numbers.
It just makes it so much harder, and then that makes you feel like I don't know how to do this, and I can't possibly figure it out. So it actually compounds the issue or the apprehension you might feel.
So if somebody's paying themselves out of their business, what's the best way to do it?
Depends. There are three ways when you have a company that you can pay yourself. One is like on a salary or wages. One is dividends so you'd have sales minus expenses, you get your profit, that comes after. Or if you've invested money in the business, you could repay some of those shareholder loans. And so all three will have different tax treatments. So that's why it's also useful to work with a professional to help you figure out what's going to be the right thing for your tax situation, especially if you have a spouse and then you're going to be filing your taxes together. Personally, you want to make sure that you're maximizing your money to the best way that you can. So you need to talk to someone who actually knows about taxes and can actually help you with that, not somebody you see necessarily online who doesn't know your specific situation.
Yeah, that's the thing. I think it's easy to kind of fall into the mistake of thinking that every CPA or everybody who does taxes, because you have tax preparers and then you have CPAs and then you have people who are just way beyond, that kind of stuff and strategies and all, but it's not the same, across the board. I think it's important to find the right fit. Right. Somebody that's going to come in and then understand your business, understand where you can get, those deductions where you're not going to get, doing them right. I mean,
doing it right. Yes.
Yeah. That's
the
huge.
The other thing I will add on to that, because COVID really highlighted this for me, but it was always important for me. I think that as soon as you're making enough money where you can pay yourself a regular salary of some level, it may not be what you're gearing up to and what you want to make in the future. Make sure you're putting some level of salary through so that you have the ability to show personally that you have an income, because your life still goes on. You probably want to get a car. You probably want to get a mortgage personally, and they're going to be looking for confirmation of income. And if you're not having that salary, it's harder for the financial institution to get their heads around the dividends and the shareholder loans. So by having some minimum level, it's really going to help you out on the personal side. And especially in Canada, we saw during COVID, businesses were shut out of support who didn't have, if the owner didn't have salaries for themselves, they didn't get support. They changed it eventually to include dividends. But a lot of government support can be contingent on those wages in an organization. So a couple things to think about. A lot of people will say, well, I don't want to pay those payroll taxes and all those deductions every payday. And I'm just going to take dividends or take shareholder loan if you can. But think about the personal side, and then possibility if ever you're going to need government support when things might be challenging, that could be an implication to that.
Yeah, it's the personal standing. I mean, it's huge. I remember I had I think I was up to like maybe 25 employees or something like that. So I got to a point where the business was fairly decent, and I was not paying myself. I was doing owner draws because that was the same thing. Oh, you know what? Like I'll just do owner draws and then keep everything in the company and whatnot, right? So I long story short, I couldn't qualify for a property. I was the owner of the business. All my employees were buying houses with the letters and the stubs and everything that I was doing for them, but I could not qualify as a self-employed, right? A self-employed business owner, and that was the reason for it is like yeah, you have draws, but those are very it's not a steady kind of thing that you can come and improve that you have. And I've been doing that for I don't know, like when I kicked it off at maybe 3-4 years into it. So even though the company was doing relatively healthy, I had to wait for like, I think it was 5 months or 6 months until I got my stuff figured out. And then I put myself on a salary. I ended up having a salary, and I mean, it was a combination of salary and owner's draws. So owner's draws being quarterly, and then salary every 2 weeks. And that, that kind of put it all together. And now I had a financial standing, right, that I could come in and prove to the banks. But it's important. I think it's important to just, at least build the habit, right, of it doesn't have to be, the $10,000 that you're putting into your bank account every single month. But if you build the habit of getting paid and build that muscle where your financial fitness is getting better and better and better, it's going to be a lot better down the road. So, I mean, when you make more money, you're still going to treat it the same way because the habit is already there.
Yeah. And even if you don't have the cash to pay it out to yourself, you can still be accruing the expense, have it sitting as a payable. You're going to make your deductions and pay them to the government, and then you're just going to pay yourself later if you need to. But for that exact reason that you just talked about, I don't want to see anybody in that position, because you create your business for freedom, flexibility, to be able to do things on your terms. And and then through really no fault of your own, but by not knowing, you get into this kind of situation where you can't then actually do the things you want to do.
Yeah. It's almost, I mean, I remember being upset. I was like, what is this thing? I can't, but I'm generating all this stuff. Like, yeah, it doesn't matter. It's gotta be in the bank account. All right. So keeping it clean, it's important. You mentioned knowing your numbers. Can you elaborate a little bit on that?
Absolutely. So bookkeeping should be done monthly. for your business. And so depending on the size of your business, you can be doing it on Excel, or if you're a little bit larger, you're going to use something like a QuickBooks, like you talked about, Rafael. You want to then, you don't have to do it yourself as the owner. And I usually discourage people from doing it themselves. You have a lot other things to do with your time and talents. It's very economical to have someone do your bookkeeping, but then you need to look at the numbers every month. So to me, that's your profit and loss, or it's called income statement or statement of earnings. It tells you all the sales, all the expenses for the month, and you can see if you're making a profit. So firstly, you want to look at the month, and then you also want to look at year to date. How many months is in the year so far that we've been through, and what are we doing overall? Because results can change month to month. You might be profitable one month, unprofitable another. The other is a balance sheet, which shows you all of the things you own of value and basically how you finance them. And the bookkeeping allows you to do that. Then you're going to be able to look at those numbers. Are your sales where you want them to be? If they are, great. What can you do to keep the trend going or to increase them? If they're not where you want them to be, what can you do? And then you're actually looking at the numbers in the moment, and you're not getting this huge backlog. Whereas a lot of entrepreneurs are only looking 3-4 months after their year end. They're looking so far in the rearview mirror. It's hard to correct things in the business. But when you're looking monthly, you can actually implement change to drive to the goals you want. So if you saw a marketing campaign was really successful, you might double down on that. Or if you were spending a lot on advertising that didn't work, you might divert your funds into something else or change the creative, whatever you're going to do. With that as well, then I encourage people to do cash flow forecasting. So planning out those ins, those outs for the next 6 months. Look at what was the actual for the month that just ended and see how close were you, and then make adjustments going forward so that you can be on top of not only the sales and expenses, but the movement of the money in your business. And again, if that's challenging, you're feeling uncomfortable about doing it, work with a financial coach who can help you and bring up your acumen so that you know what to look for. It doesn't need to be hard or complicated. And even to get started, there's some questions I encourage people to ask of their bookkeeper or their accountant that they don't need to have a lot of financial knowledge to ask. So the first one would be, when your bookkeeper sends you the numbers at the end of the month, what kinds of trends did you notice that you think are really good or you're worried about? And then they're going to tell you what they see in the numbers. So now all of a sudden you're asking them to do a little bit of analysis and feed it to you. If you were in my shoes, what would you be concerned about? When you're looking at these numbers, do I look similar or different to other businesses you know in the industry? So you can start to gather some information from them by asking questions. And unfortunately, what happens when you don't feel comfortable about the financial side of your business is you kind of clam up. You don't ask those kinds of questions. So even get a couple of those in your back pocket and ask people who are supporting you and helping you while you're navigating your way to bring up your financial skill level.
Yeah, I love it. I know for me, it was a matter of not knowing what to ask.
Mm-hmm.
And simple questions like that. And I didn't know that I could ask. I didn't know I could ask my CPA. Like in my head, everything, okay, cool. I'm getting the CPA report. I don't know what P&L means, but there's a number over there that's not red. So okay, let's roll with it. But yeah, I mean, at the end of the day, acumen has to be, a responsibility that's on our part, right? The financial literacy, it's one of the things that we have to get proficient at as entrepreneurs. And again, it doesn't mean necessarily becoming an expert, but if you're able to forecast, if you're able to at least make some projections based on trends, on a historical record, that's going to make a huge impact, because then you're going to realize, okay, if I want to increase my revenue by 25,000 or by 100,000, what does that look like in terms of expenses, and that sort of thing. So you can actually start, again, running the business by the numbers, right?
I would encourage people to think of it as a journey, because and you're almost building a house. So on the journey, your foundation is going to keep increasing. There is no way to learn all of this overnight. And so at the beginning, you're going to just get your numbers and look at them, ask a few questions. The next month, you're going to feel more comfortable because now you're starting to see trending. As you get more involved and you get more comfortable, then you might notice, okay, when I deal with this particular customer type, I don't make as much money on my services as I do on this service. So what can I do? Can I offer more value? Can I target people who will pay more? Can I change up my offering? And it's all going to be about refinements and modifications, but not necessarily wholesale changes. But you can only do that over time. So don't get discouraged. It's a journey you're going to carry on your whole life. You're going to make missteps. And so be kind to yourself when you do step off the path, because you got to just get back on, keep trying, keep asking questions. And all of a sudden you're going to realize, wow, I know a lot. And it'll just kind of sneak up on you that it's been building over time. And it wasn't this one big dramatic revelation that you learned it all.
Yeah, I know it. It took me years to figure out my chart of accounts. Like, okay, cool. This is a chart of accounts that works for me, like the way I have to break it down and everything. And to understand it, I mean, it's just, it's something that you got to do if you're running businesses.
For those that are listening, chart of accounts is like the skeleton of the accounting system. It's almost like you'd see the bones of the arm and the head and the neck, and it's the way everything's laid out, but getting it right is so critical.
Yeah, thank you for that, by the way. So, yeah, no, I mean, I couldn't agree more. I think financial, I'm making the same point over and over again, but I think it's not spoken about. It's not a sexy topic. It's not one of those things that's, riveting and inspirational, and you walk away feeling like you want to take over the world, like when you go to a seminar and then you get inspired to take action. However, it's really the infrastructure of any successful business, financial literacy. You got to understand how your numbers work, how they come in, how the cash comes in, how the cash goes out, what stays there for how long it stays in there, what your shelf life is, if it's a product, what your, days of transactional days, if it's like a real estate transaction, what's your average hold time for, fix and flip properties and that sort of thing, because all of that matters. It matters at the end of the day. It matters to the bottom line, right? The longer you hold something, the more expensive it gets. And if you can dial that stuff down methodically, you're going to make more profits. So
absolutely. And I've been seeing so many more people acquire businesses because they want to take their destinies in their own hands. And I've been working with some really amazing entrepreneurs who stepped up to say, you know what, I need to learn this because this is my life and I need to make this work. And I don't want to just get by. I want to make money. I want us to grow it. I want us to be able to go and do outside investments. Many of them are doing outside real estate investments with the profit that they've made in the company. And so it's really exciting to see people take control of their futures like that. Because you can't necessarily count on a corporate job for 30, 40 years anymore. If you can control your destiny, it's so much more empowering.
Yeah, no, absolutely. I mean, it happens all the time, right? We see it where there's a false sense of security when it comes to corporate. You feel like, yeah, I mean, I'm there. It's a good, solid, stable, secure job, and then they go out of business for whatever reason.
Yeah. Or they just take your seat away.
yeah, exactly. I mean, 1,001 reasons, right? But at the end of the day, I mean, I think betting on ourselves is one of the things that entrepreneurs have in common, and it's taking that leap and understanding that there's gonna be things that are gonna have to be learned along the way, right? And financial literacy being one of the top tools or skills that you need to have, at least, even if it's napkin math, right? You got to do the right math on the napkin. It doesn't matter if it's a napkin.
Well, I say to my clients all the time, if we can't figure out fundamentally how your business works on like a piece of paper with a pen, you're overthinking it. Like we're making it too complicated. We should be able to get the gist of what's going on with some quick numbers and scratch them out. Obviously, we'll get into more details like when you get into your bookkeeping, but we should be able to fundamentally understand and explain what's happening in your business with some simple numbers.
I love it. I understand. You have a coaching program. You have a training coming up. I believe it's in a couple of weeks, next month, or this month, right? On the 20th, you said?
Yes.
September 20th.
So because it's my privilege to support entrepreneurs, I like to bring free education for them. So it is the Entrepreneurial Peace Training, BizPeace Training, and we're going to go through over 5 days. We're going to talk about profit versus cash flow, teach you how to do cash flow forecasting. We're going to dig into pricing because pricing is about the math, but pricing is also about the emotional baggage that comes with it as we articulate our prices and ask people to pay us money. We're also going to talk about navigating stakeholder money conversations because so much insecurities come up, even when we're trying to collect our receivables from some of our clients, and we start throwing out all of our insecurities about our own abilities when it comes to the numbers. So lots of free training. We've got a workbook that goes along with it, and would love to invite anybody who's listening who wants to brush up on their skills or wants to get started really increasing their financial acumen. You can get registered at bizpeace.com, and we would love to have you there.
Perfect. No, that's amazing. Yeah, I mean, people got to take advantage of this. What's the website again? Can you repeat that?
BizPeace.com. So BIZ peace, PEACE.com.
BizPeace.com. We'll put that on the show notes. And yeah, I mean, absolutely especially if there's I mean, for the listeners out there, if you haven't ever tapped into a financial training, right? They can sound boring. You're thinking, Excel spreadsheets and everything and all that stuff. But again, it's fundamentals. It's stuff that we need to own, at least understand. When you get into a conversation about, projections, about business planning, about this, about that, it's not just pluses or minuses. It's sometimes it takes a little more, right? Understanding what this does. If I change this number here, how is that going to impact the overhead over here? And at the end of the day, it's connecting all those numbers on the back end. So it's important to run into trainings like this, and especially if you have something going out there. I appreciate you so much for sharing that with us. I think it's going to be a blast, and definitely something of huge value there.
Well, thank you so much for your opportunity to share it. And our participants, even if they're attending one of the 5 days, they're going away with action items that they can put into practice immediately. And many are putting into action items from every day. And the workbook keeps it simple. You don't have to hurry and take notes because it allows you to keep up and really focus on how does this apply to my business? Because it's all about your particular business. It doesn't matter what someone else's is like, because every industry is a little bit different. So understanding your own is key.
Beautiful. I have two questions before we kind of start signing off. But one of them is if somebody's getting started in their business, and I know you mentioned three things they have to watch out for, right?
Mm-hmm.
On the technical side of things, but on the education side of things, as far as bringing that financial acumen up, what would you recommend to somebody that's just getting started?
Look into your industry, understand the way that things work, just like you talked about with your first business. Like, what are the payment cycles? What's that going to look like? What's the expectation in terms of capital assets that you need to own? So talk to other people in the industry to understand what's been their experience. That's a great way. Spend some time getting a network built up of other entrepreneurs is very important, so that you have people to go to. And then perhaps you are working with a financial coach to just get some concentrated training right up front. Maybe they're helping you with your business plan to get started, so that you know all of the things to watch out for. So those would be 3 suggestions they could put into practice.
Perfect. Tracey, I like I like this question. It kind of brings back a little bit of the thought process in terms of mindset. If you were walking down the street and you ran into your 17-year-old self, what would you tell Tracey?
Start a business earlier. That's what I would tell younger Tracey. And don't worry about being perfect, because sometimes we get so caught up in trying to have everything perfect before we bring it to market, and we can really spin our wheels and waste time and waste money. And the only way we can actually improve is when we get something out there and people can react to it. That's how we find out we've got the wrong offering, or we're targeting the wrong client. So I would start earlier and be less perfect.
Wow, that's huge. The less perfect part really resonates. I had the same mindset, and one thing I do now is I build something to 80%, and I feel like if it's 80% good, I'll release the beta version of it, right? And then the market is gonna tell me what's missing, what's not missing, what's good, what's bad. I'll come back and then rework it and then relaunch again with by that at that point, I mean, you're end up with a pretty decent product. Why? Because it's not just all you, right? It's you and the market.
Absolutely. And it's the way you've got to figure it out. And if you wait too long, you might miss an opportunity because the world is changing so fast. You might have something that fits a need right now, and nobody's expecting perfection. They just want something that fills the need, but you might lose that window.
Yeah, that's huge. That's huge and so true. Tracey, if somebody wants to get a hold of you, I know you shared the website, but what's the best way to reach you?
Best way, if you want to send me a message with comments or questions, find me on LinkedIn. Tracey has an E and Bissett has 2 S's, 2 T's. I'm on there all the time, so that's the best way to find me. And you'll be able to find all my social handles and website there too.
Perfect. Tracey, thank you so much. I mean, this has been enlightening. I no, it really has. It's a good way to expose, right, the importance of financial literacy. It's something that, again, it's not sexy, so not a lot of people talk about it. There's not a lot of workshops just focused on financial literacy. You kind of have to kind of look on your own, pick content here and there and piece it together for the most part as you're starting off. But it's amazing that you have something that's already put together and that people can go to. So hopefully listeners out there will take advantage of this. Go to the link, register, definitely take advantage of 5 days of full training on financial literacy. So especially from a professional who's been doing it for over 20 years. So that's amazing. Thank you so much, Tracey. It's been a blast having you at the show.
Thank you so much. It's been my pleasure. And I really appreciate you sharing all your personal stories, because certainly all of the things that happened to you are very common. And it really allowed people, I think, to get a feel for why they want to do things different. And I hope so many of you will join us for the training, and you can get registered at bizpeace.com.
Beautiful, beautiful. Thank you so much, Tracey.
Thank
Boom.
you.
It's a wrap.